The so-called competition is talking about Tesla this week. The fact that they see Tesla as the competition for their EV products is all you need to know. It explains that they really don't believe that EVs will be 100% of the entire auto market by, well, at least within 5 to 7 years. My number is 5, other people think 7, and other people think it'll be 2035. Go figure that. If the competition believed what I believe and what Elon believes is that the ice age is going to be over, certainly by the end of this decade, then they would understand that if they have a compelling EV at a compelling price, they will sell all they can make. It won't depend on Tesla making bad cars or too expensive cars or anything else. It'll just depend on if they can make enough vehicles to fill the huge void that there will be for cars. There will be a certain number of people that want these cars. It will be far greater than the number that are being manufactured because nobody will want a nice car anymore. It's already happening. It's happening sooner than anybody expected, that even right now today, there's an equivalence on the sticker price. It's no longer the 5-year, the amount of what you can save, what you can compare in terms of the ownership over 5 years. It's now down to the sticker price being the same, even lower than the equivalent models. And the 5-year cost of ownership on a Tesla Model 3 is like the same as a Corolla. Okay, so Tesla's not trying to hurt anybody with price cuts. That isn't what's going on. It's not a price war started by Tesla, but that's how you see it in the normal world of the automotive industry. But this is not the normal world. This is a disruption world. And the goal of all of them should be make as many compelling cars at a compelling price as you can. And that should be true for Ford and Renault, who this week were saying things about Tesla starting price wars. Okay, this is Randy Kirk. If you like this kind of content, if you like what we do on Friday night, where we talk about the financials and we talk about the good news with regard to Tesla during the week, then like it down there, subscribe, hit the notify button. And of course, I do need more people to join Patreon. If you got $5 a month, you don't know what to do with, instead of buying one more latte, could you, send it over my way? Okay, let's go. So I'm going to do a video tomorrow that will show how Tesla will get to the 20 million mark, being able to make 20 million cars a year and sell 20 million cars a year, probably before 2030, certainly by 2030. And this will be an all new look because, gosh, things have changed. What has changed? Well, because of the difficult year, Tesla is now selling cars that are below their sticker prices below that of their competing cars in the ICE space. That was not expected to happen until maybe next year or the following year. So that's changing things in my analysis. And the other thing that's changing the analysis is that we do have this kind of recessionary flat year, which we'll talk about in a second. And we also are looking forward to maybe a boom year in 2024. So again, these are going to change some of my thinking. I'm also going to do another video next week, which will show a fairly easy glide path for enough manufacturing companies, existing manufacturing companies, automakers, to be able to get to 65 million by 2027, which is about what I think will be needed in order to make the switch to the ICE age. Yes, in a good year, there's 80 million cars sold, but I think if we can get to 65 million by the end of 2027, going into 2028, the run rate will be enough to eliminate virtually all ICE vehicles. All right, so that's going to be coming up next week. The good news for Tesla this week is that they ended up with 2 days in a row of green. Yay! And they also were green 3 out of the last 4 days. So that's a pretty good deal. I continue to believe that smart investors will start to get the reality that Tesla is going to close the year with close to a $5 EPS. That is where they're going to be heading. But by the end of the year, the market is also going to understand that they're going to double that and maybe more than double that in 2024. And they're going to do that because of the stuff I'm going to talk about tomorrow morning. No, I'm sorry, Sunday morning with Brian Wong, where we're going to talk about how Tesla is going to do in 2024 close to 10, maybe more than $10 billion of profits in the energy business. And that will be a conservative estimate. Watch it, you'll see. It's not like, I know you expect me to be the uber bull and I just think way out there. No, this is going to be a very conservative look. So that would allow Tesla to, just by the earnings in the energy storage part, to pretty close to double, maybe even double 2024's earnings. All right. I want you to keep in mind that the price reductions from Tesla in the last few weeks, they're not going to be something that instantaneously goes into the brains of every prospect that's out there looking for a car, or looking for an electric car, or even looking for a Tesla. This is going to take weeks or maybe even months before it really filters down to where all potential, well, it will never be all, but until the vast majority of prospective BEV buyers or Tesla buyers get what's going on. This is actually maybe a good thing, because while Tesla does need to sell 500,000 to 700,000 minimum new Model Ys this year than they did last year, that's not going to happen all at once. That's going to happen, they're going to be doing 1,000 cars per month. I'm sorry, 1,000 cars per week more than they were the previous quarter each month. So it's a continuous ramp throughout the year. And if all of a sudden everybody was, saying, oh my gosh, I got to go down and get that Tesla. Well, now we'd be back to the same situation where you'd have long waiting lines and there'd be no inventory for people who want to buy a car and get it right now. So we might be in kind of a good situation right now. People are complaining about the 16 weeks of inventory. 16 weeks is really, really good for the auto industry. Auto industry very commonly has 30 weeks and sometimes way more than 30 weeks of inventory in supply. So 16 weeks is fine. I would, however, actually expect that to decrease. All right. What about the stock market? All right. Well, it looks like the market has baked in the not great news of Thursday and Friday. I mean, let's face it, a 1.1 GDP for the first quarter, that's 1.1 per year growth for the first quarter, is not good news. I mean, it's good news if you're the Fed and you want the economy to slow down and even go negative so that you can get the inflation under control. So to a certain extent, as we know, sometimes the market looks at bad news like this as good news, especially going into a week when the Fed is going to adjust interest rates again. So that was not great news for the economy, but and it's probably going to continue down into negative territory in the second quarter, although it's really, really hard to get the economy to go into negative territory because there's so much employment. However, I did mention on Wednesday, we're seeing trucking down 6% in March, UPS, FedEx down. So you can almost always guarantee that when the truckers are moving less freight, that you're heading towards some kind of lowered expectations in the future for the economy. Moreover, some numbers I looked at this morning is that the number of containers coming out of China is also down fairly significantly. In fact, container costs are now down to $1,500 on the spot market compared to $18,000 for that same container a year ago on the spot market. So anyway, that was some bad news on Thursday. On Friday, we heard about the PCE, and that is the Fed's favorite inflation gauge. And that came in at 4.6%. So that means, in other words, that a total inflation of 4.6 year over year, but it's fairly flat now. So it's staying at 4.6. So it was up around 9. Now we're down around 4.6, but now it's flatlining. It isn't going down more. And that is also true of Trueflation.com, which is one of the ones that I really like to look at, but they're sitting right around 4%, just under 4%, but it has been going up and down. It is not going trending down anymore. So Then in addition to those two pieces of bad news, we had First Republic, of course, which is now on the brink of going into receivership with the FDIC. And that's not good. They are looking for somebody to bail them out by buying them out. But the reality is so far, nobody's running up the flag. So that continues to create anxiety about whether these outflows of funds that have gone out of the banks and into money market, because the money market's paying, 3.5% for 10-year. I mean, it's, why not? So, but that trend is causing people to be nervous about the banks. So yeah, those three things all going on toward the end of the week, and yet the market was up nicely both Thursday and Friday, along with Tesla. So, yeah. Okay. So because of all of that, I forgot to mention bond yields continue, 10 years continues to be down again, 3.43. That's about where it's been really for quite a while on the 10-year, and continue to have an inversion with regard to the 2-month and the 2-year by 1.5 and a full 100 basis points for the, 150 basis points for the 2-month and 50 basis points for the 2-year. So that inversion continues to be there. That would be really good if we could start to see that starting to come closer together, either by the 10-year going up or the other two coming down. Obviously, the other two coming down would be better. All right. So because of everything I just said, no one expects the Fed next week on May 3rd to pause. So at 2:00 on Wednesday afternoon, the Fed will announce what the new interest rate will be. Everybody's expecting 25 basis points increase, but what they're also expecting is more passivity, not as much hawkishness, a little dovishness out of the 2:30 conversation with Chairman Powell when he does his press conference. I don't know if we'll see that dovishness coming out yet, but that is what the market is hoping for. Again, that's probably why the market was showing a little energy on Thursday and Friday. So what does that all mean? Well, I think that the Fed will raise another 0.25 before they start pausing and or reducing. The overall, the pundit class and the folks that they asked to vote, which is not me, on these things, believe there will be these two quick increases of 25 basis points, and then there will be a pause, and then there will be two reductions of 25 basis points before the end of the year. And all of that will set up a rough rest of this year. The last 8 months of this year will be rough. And then, but it'll set up 2024 to be really, really good. And so when will that really, really good happen? Elon Musk says he thinks it'll start happening in the spring. It might happen before the spring. But what does that mean? Well, that means that the stock market reacts 6 months before. If they believe what Elon believes, if they believe what these bond folks believe, that the Fed is going to start reducing rates in the latter part of this year, if they start to see that, then we should see the beginning of the next bull sometime in late summer or the beginning of fall. When that bull starts, we will also see Tesla respond to it, as it always does, and it'll respond to it at some kind of a delta of 3 or 4 times the market. This is always a good time. This is when you can look like a genius owning Tesla stock. And so that's the expectation going into the fall. Now, the way that Tesla might not have that move that will be greater than the stock market would be if somehow Tesla misses significantly in some way in terms of execution over these next 2 quarters. Sure, could they miss the street's expectations? Yes, that can happen easily because the street can over expect. But if they really miss their plan, if they're really somehow not executing according to the real plan, I don't see that. I don't think there's a chance of that. In fact, if anything, this energy story will start to become a big story by the 3rd quarter earnings report, so that if anything should start to accelerate the company. The Cybertruck will come out, that will accelerate the stock. There are possibilities that full self-driving or the robot or something else could all of a sudden really accelerate the stock. So there are many things that could create a tremendous amount of optimism for the rest of the year. But I think that Tesla, short of those really big surprises, I think the rest of this year we'll see Tesla continue to move with the market, but the market will start up. That's why I continue to predict $300 by the third quarter, and then moving towards $400 by the end of the year, maybe achieving $400 by the end of the year as the market moves up, and only if the market has restarted a bull. All right, so I think that's it for today. Again, check out some of these shows we got coming up this weekend. I'm trying to put them all down below in the description, so you can look in the description and see what other episodes we've got coming up. That this is a good time to like if you like, and subscribe, and then if you hit the notify button, you'll be notified when these different episodes come up this weekend. And finally, yes, it would be lovely to have a few more folks join in Patreon. It's only $5 a month. And thank you so much for being here today. It really helps the channel just by participating. This is Randy Kirk, and it's been great talking to you.